Good day, traders. Stacey Burke from Stacey Burke Trading. Today we're going to be talking about scalping and how it can be a very profitable trading strategy. Stay tuned. We'll get right into it. Good day, traders. Today we're going to be talking about scalping, and in particular one of my go-to setups, which is the pump and dump or the dump and pump, depending on whether it's an up or down move. First thing is I want to make clear, if you're making money with your strategy, regardless of what anybody thinks, says, or does, if you're making money, keep doing it. I mean, the whole point of trading is that you want to make money, and 99% of traders lose money. I know they say 90%, but I'm going to say it's 99%. So if you're making money doing what you're doing, keep doing it. And this video necessarily isn't going to be for everybody. I'm going to be talking about one of my main go-to setups, which shows up over and over again. We're going to look at some variations of it. I mainly focus on gold, NASDAQ, and oil, but the same setups will show up also on the major pairs. Now, this suits my temperament because I've discovered over time that I'm not really probably cut out for position hold trades. Like being a few days, a week or 2 weeks. I may have some small positions in the market in those types of trades, but really it's not part of what I try to do on a day in and day out or a week in and week out basis. I just find that my temperament, my psychology, my level of risk aversion and everything else is designed, I think, for short-term trading, and I like to be in the market and out and be done and finished and have peace of mind, sleep at night, start the day fresh again. That's come from a lot of hard, painful learning. And again, it's not for everybody, but my style of trading works for me. And I've also found that it's been the most successful in terms of the size that I've traded. I would never be able to trade the size that I do and hold on to positions on the longer time frame. The swings would be too large financially and emotionally for me to handle. And not to say that there hasn't been some psychologically damaging events trying to discover my ability and hone that skill on the shorter time frame, but it suits my temperament. Number two, trades are confirmed and are over reasonably fast. So there's not a lot of room for error the style that I'm trading. I'm pretty much wrong within a couple of minutes, or I'm right within a few minutes, and I'm usually out of these trades anywhere from 5 minutes to maybe 45 minutes, depending on the length of the move. If it's a large measured move, it could be a few hours, and that typically will be on a level 3 type trade, high of the week, low of the week sort of situation. I am more prone to short trade setups. That said, I do miss out on some great long opportunities, and I do miss out on some trend opportunities. But often with the downtrend, the short trends, I tend to scalp better on those than I do the long trends. And what I find is that I'm more comfortable putting more size on short trades, and I will reduce size on long trades even when they're probably better setups. And that's just part of my psyche that I'm working on improving every day. But scalping for me has been the most profitable strategy, and it requires to some degree patience, but only when you understand, like for me, the trades are very time specific, and we'll look at the examples of that today. I can be done in less than an hour. I may be at the screen for a few hours, but the trade setup may take 45 minutes to an hour. The trade can be over in 15 minutes. So often I will, allow the market to set up, or if I'm there pre-market, I may be in a trade and I will be done, and I may not sit around for that session. But often my main go-to setups are the pump and dump or the dump and pump, and we'll look at some examples of that and how often it shows up every single day. Things to remember. There will be plenty of trades. This style of trading, and you can refine your own style of scalping if you have, a preferred method or strategy. Again, with this, I really focus on setups. That's all I really look for are setups. And I do not want to be at the screen for an extended period of time. I am looking for setups every session, and that's it, and then I'm off the screen. That's just me. I will come back in the gap time often if it's been a big runner, whether that's Asia, London, New York. I will look at the rollovers for setups, but I am only looking for setups. So that being said, there will be plenty of trades. So don't ruin yourself over a couple of, I said this earlier today in the psychology video. Always focus on the big picture and end the day strong, end the week strong. It's so critical to go into the weekend with a clear, healthy mind, on a winning note, knowing that you did everything right, and being relaxed over the weekend, not beat up mentally, not beat up financially, and then coming into the week strong and having a winning mindset and the confidence and the headspace to continue that in a constructive manner. Number 2, there is plenty of money. There is no shortage of money out there. So in terms of looking, my setups are designed at looking at stuff that is scalable. Like I look for repeatable patterns that the odds are heavily skewed in my favor and they're scalable in size. So these markets allow for a lot of size to go into them. But if you're trading all over the place, you can easily get smashed up and blow your account out. So again, there's plenty of money. Plan in advance your setups. Know them cold. Your stop, your risk management, your entry, and your exit. Do not change plan midstream. For people who are quick thinkers and they can react quickly, maybe they're more suited to this style of trading. And so when I'm in, and again, if I'm sensing that I'm wrong, I'll cut the trade. I don't wait too long for it to come back against me a long ways. I will scale in. So I'll put, minimal size in and add to that as the trade is confirming. And again, I'm taking it off and then maybe holding on a trailer if it's got a little bit more room to, if it moves strongly on that scalp. And just to clarify, some of these scalps will be trend trades, so they have room to continue moving. Some of the scalps will be in a trading range, and I'm cleanly just scalping the return back to the origin of where that trade started. Different instruments will trade differently in terms of their time frames and volatility. So I like to focus on gold, NASDAQ, and oil, and I do not recommend those straight away. Study them. We'll talk about that in a second, but some of the volatility, for some people, they will not be prepared for that. The major pairs on the longer time frames can set the trades up. I repeat this. I use the 15-minute charts to identify the setups, but I'm definitely getting in on the 1-minute chart. Once I know my level, I'm just getting in. I don't wait for the 15-minute bar. That means I'm potentially 15 minutes late into the trade. And we'll look at an example of that. I'll address a specific question that a trader asked me about, and we'll talk exactly about that type of trade. So again, focus on 1 or 2 setups. Study all the nuances and pairs that show these setups repeatedly. So again, I like to focus on gold because, as you will see, my pump and dump setup that I go for shows up almost every single day, at least once or twice. And then master those setups. Know how they will present and how they will vary, and then understand how to trade every aspect of them. Master those setups, and then understand how you can potentially scale those up in size. And then lastly, practice on demo. Do not do any of this with real money or live money until you master these setups and you know them cold. So this is an example on gold. These are trades that I did take. The general rule of thumb is I'm looking for a market to burst and explode. So this first hour comes down and puts a low in, and we're not even concerned about that. Market comes down, puts a low in, first hour. This is the Europe-London window. We get an engulfment explosion at the previous day's low, which, if we back this chart up, we can see the low was already locked in earlier in the session. But it's the explosive move that I'm looking for. That first explosive move is the explosion out that we're looking for. Now, again, we can draw lower highs. We know that the market is going to potentially at the beginning of a session head back to a high or a low. This is in a trading range. But what I want traders to understand is that when I get this explosion, I'm looking for 45 minutes approximately of pump and dump. So what I mean by that is this. This market, this is the first candle of London. And again, it can happen in the first hour. It can happen in the gap time. It can happen anywhere. When I get the first candle of London, this bar is my measuring bar. So I'm looking for this 3-push pattern to go up and form peaks and break down, revisit the high, and then fail and come vertical back into the trade that starts the move. We'll look at some variations of this. This is at the low of the day, and this was in a market that was reversing and going long. But that did not change my strategy. I was in the long move initially. So again, sometimes these bursts are going to be hard for traders to enter into. This was a first bar trade in London. I'm talking about the short trade for the pump and dump. So I like to see a market break down and fail. And this first burst goes up in 7-8 minutes. Now, we've talked about time compression and everything else. I'm going to sort of not go too in depth, but it's the first 15 minutes that I'm looking for a high to be put in place. That forms my first peak. That first 15-minute bar gets 15-minute traders into the trend on a longer time frame. But it's the burst that I'm looking for. People will ask me, well, how do you know it's not a trend trade? Well, I'm in the initial trade long, and sometimes I may not be. But my thesis is that in this particular situation, we're still inside of the high of the day. So I know it's not a breakout trade. I know that eventually it could be, but I do know that nobody gets a free lunch, and I'm always looking for that return move back to that original trade. And if anybody has been in these trades where they've held on to them and been stopped out at break even, first mouse always gets retested. But it's this right here, this 45 minutes, that I want traders to understand. Somewhere in that 45 minutes to an hour, I will see the high locked in if this is going to give me my setup. And indeed, even at 45 minutes, that may be the trade, but somewhere in that 45 minutes to an hour, I should have my thesis confirming. First 15 minutes bursts and puts a high in. They continue to go higher. This next higher high is at the half-hour mark. Then you'll notice we talk about 3 levels of rise, 3 levels of rise, and 3 levels of fall. Those 3 levels are 25 pip boxes. So you'll also notice that the style of, I'll move this up a bit, the style of this trend is back and forth, back and forth, back and forth. And then we get to the last level. So we get an explosion. And that move is 50 pips. It pulls back to the quarter level and continues up another 25. Continues sideways and goes up another 25. At which point we are 40 minutes into the hour. This trade then breaks down. Breaks back down through 50. And this little pattern right here, which we'll talk about on a longer time frame, 2 things have just happened. We got shorts in the market. They've broken the higher low. So this last pump, you'll notice a pin hammer on the last level takes traders right up into the high before coming back and hitting stops, but also triggering shorts and getting shorts in up high. We have a little 1, 2, 3 bar reversal right at the high. Now traders say, well, why wouldn't you want to get in here? You can put a position in up here. I don't like to do that because what I'm looking for is the explosive move. What that means is if I try to time the high or the low, that can become more risky in terms of even if you're just putting a small position in, you're still trying to sell a market that's moving up. And you're sitting there for another half an hour back and forth before the market finally goes vertical. So what I'm waiting for is my break in structure. This pin hammer takes traders up one more time into the high. Then the engulfment. Traders are shorting this engulfment. What I'm looking for is the pin hammer after the stop hunt or a retest up into that engulfment level high. We have 1 push, 2 pushes, 3 pushes, but I'm looking for them to pull back up into this area. If I don't get that, I'll take the pin hammer. If I'm not already in up here with a small position, I'm adding to it here. And then bang, 1, 2, 3, 50 pips. At any point, if it hasn't hit my target and we get this pin, I will be trailing and being prepared to take it off anywhere down under the numbers or at that target. Now, in this particular case, the market blew off quickly. So, again, they pump it up, pull it back, pump it up, pull it back, pump it up, pull it back, pump it up. We have multiple time frames being triggered into these trades. These levels are creating stop loss levels for trades for that market to come vertically through back quickly. So again, there is a long trade here. This is a different type of trade. I'm taking the burst, but you can see now as this market's tipping over, how I can scale into that for the fast explosive move back down. So the basic concepts I want people to understand are 45 minutes. It takes at least 45 minutes in most cases for this market to set up. If you understand that, and you understand that this market started at the first bar of the hour, you know you're looking somewhere towards the end of the hour. Now this market broke down. This follow through is a 15-minute bar closing back as a bull candle into the high. So this higher low is trapping volume. We can call this a death line somewhere up around 50. We have our major round numbers. Our quarter box is up above 50 of trap volume. And this lifting of price is what creates the ability for this market to explode straight through on the way back down. This is a scalable opportunity for me where I can add size in and be out of the market quickly. Same day in the gap time, we have a market that's continued to rise from London. We get our pin hammer at 1305. Whenever I see a bar like this, I will draw a line across the high and the low, because that again 3 levels. So if we go back and we look at where London started, we go back, we see the market came back from our original pump and dump, traded sideways. This was a large W on the 15-minute chart. We have 3 levels of rise, 100, 100, and we're into the third 100 pip box. Now I just said to you, 45 minutes. I'm going to look for something to potentially be failing. I know we're in the gap time. I know we're getting in towards the beginning of the U.S. session. This bar is at 5 minutes into the middle hour. So if we go towards the end of that hour, 45 minutes, we have a 3 quarters, 25, 25, and 25. Another 3 levels. Potentially then at 75, we might see this market failing. We get our little false W structure at the high, which is a rectangle at the high of the day. Our 3-bar pattern, engulfment, it breaks down, pulls back, breaks down again, pulls back, and rolls over. This bear candle rolling over after I'm confirming that the high is locked in. The high is now locked into me. This is locked in, and I'm going to look for this sloping volume for a fast vertical move. Sloping volume, rising lows is perfect for a market to fall through and go vertical. Now again, this isn't as large as the first one, but it's still 25 to 50 pips very quickly with very little stress. Pin hammer, 45 minutes, 3 levels of rise. The market fails, trades sideways, breaks down, pulls back, and goes vertical back to where the move started. Same day, a different variation of this setup. We have the high of the day. We have the high of the day. This was a news candle right here. So news, 8:30 New York time. And this is an example of using the news to trap traders in the wrong direction, into the high or into the low, again for a fast vertical move. Pin hammer. Now this is not going to be 45 minutes because we now have 3 pushes, but we have our 3 levels, 25, 25, and 25. into the high of the day, but we also have 1 push, 2 pushes, 3 pushes, and an engulfment. Again, looking for this setup at the high, at 3 levels, at 75, pre-planned, knowing that we could have this set up. This is an ideal setup. Coming back to understanding, we have traders from London all the way on both levels who are in profit, who have not had stops hit. This is a day that's a textbook perfect example of knowing that they're going to be going after at least the higher level longs. But this is a perfect example of a news announcement, not getting in front of the news, waiting for the news to print. 3 levels, 15 minutes, 1 push, 2 pushes, and a 1, 2, 3 engulfment. Anywhere as it breaks the low of this bear candle or as it's falling, I would be adding into this at least till the break of 50, taking some off through zeros and holding on to see how far this move went. As you can see, essentially we were in a 100 pip box. They went 25 pips above 50 and traded back, hit stops below 50, went into consolidation, and again the same process starts again. We can start it on the first burst. Same process, pump and dump. There's a pin hammer. I said to you 45 minutes. This candle starts at 10 minutes into the second hour. So again, they've come down, they've hit stops, they've locked in a low, gone into consolidation, they burst again. Again, this is at 10 minutes into the hour. So we're heading into the New York Open session. We form a high. The market trades back up into that high. At 45 minutes, at 40 minutes, we have a large engulfment candle. This is the New York Open going up for 15 minutes. We have an engulfment candle potentially locking in the high, but also trading back up into the high after the news breakdown. So you'll notice again we're trading back up into the high. They engulf it. They go back up, as we talked about earlier, trapping volume one more time back up into the high. They engulf underneath 50 inside of the high. The high is locked in. We've locked in the lower high. They've gone back up one more time into that high. So again, I do not never chase a large candle. And you'll notice on that third level, we have another pin hammer. Whenever we see pin hammers going up into the high on higher levels, we know we're getting into the last run at the top level 3 of that trade. Pin hammer, pin hammer, pin hammer. 1 push, 2 push, 3 pushes into the high engulfment, break in structure. Back up into the high, sideways engulfment at 50. Shorts are in the market. We get our first leg down. Taking some off, you can recycle back into this same trade. We know that this market is broken down. We know that we have stops under the first leg as well as the trade from back in the London session. But coming back to the same concept. Pin hammer burst. I start the clock. 45 minutes. I know the New York Open potentially will take us back up into the high, which they do. They engulf the high and break structure. They take out these higher level longs. They go back up one more time, go into consolidation. They hit the high of that run up, but they are still inside the high of the day. They engulf, they break down at 50, our major round numbers. Our first leg down, we get a pullback, another breakdown, and a follow-through, and then the blow-off move all the way down. So you can see that these trades have potential. You can be just taking off pieces as you go. But this 3 burst, this 45-minute pattern is what I'm looking for. I'm not worried about chasing these moves. Sometimes there will be reasonably decent trade opportunities back to the extreme. And some of those moves may actually be breakouts that fail. Now, I talked about this example last day, looking for a day one trade after a big strong close on a Friday on a market that's tanked. We went through this example. I look for pairs if I'm looking for a major pair that pumps up in the pre-market in a downward market, and vice versa. We'll look at some examples on long setups as well. This is a 15-minute chart. So again, they pump the market up into the round numbers before rolling over and failing. Now, just to clarify, in this particular setup, you can get in on the 15-minute. I like to get in on the 1-minute charts. So the same process applies. Once I know I have my 15-minute bar pumping up, I'm looking for the pattern on the 1 minute. I'm looking for the same type of situation. They've pumped it up on the 15-minute. They've taken it up into the high. They pump it up again. There's my pin. I'm looking for a pin right near the high. There's our engulfment. I would be in the market at the open. I would add to it on the pin hammer for the short trade, and I'm looking for a minimum back to the quarter level. Now, in this particular case, we're trading with the trend. This market may have the potential to follow through. If you think you're selling the high of the day or buying the low of the day, that is your discretion as to whether or not you want to hold on to something. I would make that decision prior to being in the market. So again, I don't like to make decisions as I'm already in the trade. I want to lock in the money. So I'm quite happy to lock it in. I'm expecting this to go through to the quarter level. I'd be taking it off. In this particular case, because it was a second day trade opportunity, if I didn't hold on to that, I know I would get, if it's a trending day, I know I'm going to get another opportunity to re-enter the trend. Now, I'm going to talk about a situation where we have a second day trade happening. We obviously have, we can call it a falling trend line, whatever we may, doesn't matter. You could be moving averages, doesn't matter what people are using. On a trending day, obviously we've broken through the previous day's low. We're falling lower. It's pulled back in London and then continued to fall again. It breaks the low of the day. Now, I hope this trader's watching this. I had a trader who bought this bull candle engulfment because they perceived that at the low of the day at the open of the U.S. session. Now, you've bought this engulfment. I want to explain that if I'm buying something at the low of the day, I want to be buying it when it comes back into the low. So we now, all this engulfment does is put a new low in place. But I also want to reiterate that the people who have gone long have bought this down low on the 1 minute. You've bought it up high on the 15 minute. Now, you've bought into a downward market. What I would be looking for is to sell back down to the low in a broken down market. So let's take a look at the 1 minute. So again, if you're perceiving that this is the low of the day, right when the session begins, we have an engulfment. We have a market pull back inside of the engulfment, then come down 1, 2, 3, engulfment again. There's our shortened W. So when you've bought the 15-minute close, you've actually bought 15 minutes away from where the trade was. And then, of course, that trader's been stopped out. But you'll see up here we have that same 3-push pattern. 1 push, 2 push, 3 pushes into the falling trend line, engulfment, major round numbers. Breaks down. Now, traders may have shorted this. It breaks down into that higher pump, pulls back one more time. So the difference again with a fast move, we see this market break down, and they put in the higher low and trap volume inside before bursting again, going into consolidation and then dropping back down through the low of the day. So the difference between 15 minutes for trade entry versus the 1 minute. If you know your levels, I'm getting in on the 1 minute. I'm not, and if I'm counter trending, which again, I would have to see something right at the low of the day to counter trend this market. There's no doubt there's going to be heat on traders that are short, especially the lower level shorts. There's going to be heat. Now, if you've bought the 15-minute close, you're buying up near the high. So as soon as I see this, I'm out of the trade and I'm looking to short this back down to the low of the day. And that's the difference. If you're not looking to counter trend a trend, you can do that, but I wouldn't be doing it with size. I'd be happier to add size into a trade that's following through with the original trend. So again, even on the third day down, so day 1, day 2, day 3 down, even though it's a Tuesday, we get the pump up. Again, 1, 2, 3. This is pre-market. This is a golden setup. 45 minutes up, they lock in double zeros inside of the high at the engulfment. I just draw a line on the opening price. They trade right back up into that at the open. There's our middle structure. And again, if we go to our 1 minute, these higher level longs in the middle of a number box are right pickings. We see the same sort of pattern, different variation, big pump candle, getting traders chasing the long. When you see a big bar like that, draw your line. As soon as that fails and rolls over, pump, pump, they lock in the high. How do I know the high's locked in? We have bulls trapped at the high now. They've engulfed that. So now with this thesis, and this rolls over, I just want to get in above double zeros. We got a horizontal consolidation. When that breaks, I'm already in. I'd be adding. Consolidation, it starts to fall. Break even on everything, taking money off as it's falling, recycling that in the downward move. We have a large pump up. This should return at a minimum back to where the move started. And if we have a great setup with trend, so again with trend, we could get a measured move of that original structure, the breakout rectangle that it came out of. We get a little bit more than that, but again, as I follow this through, I'd be peeling off money on the third level down. So the trend trades have the opportunity to follow through for greater distance. We're on the third day down. That said, that could give us a reason to know that this trade could now be at a day where the market could start to consolidate and maybe reverse. There's the low of the week. There's Tuesday's low, the low of the week. They break out, they pull back. There's our break in structure on the long side. We talked about this. Pay attention to closing price. We have our first green day. The market retests the low of Monday, and breaks higher in Asia to resume the trend day back up. So that's an example of a pump up in a downward moving market, the trend trade. And even if we zoom in, we can see the same pattern in the gap on Tuesday on the 15-minute chart. The pin hammer right here, pin hammer. Now again, this is going to be different timing because it's a 15-minute chart, but the market goes higher. And again, for North American traders, we take this up 25, 50 pips back through and is at the high of the day. There's our 3-bar consolidation and engulfment at the high. So 3 little bars at the high, then bang, the engulfment. Traders could be short on this first breakdown, or they can short it when the pullback pulls back in. Now again, I'd be on a smaller time frame. So when we get up near the high, we can see the market possibly at this quarter level. 1 push, 2 push, 3 pushes. It breaks down and traps volume. That higher level tails, I'll immediately box that off. I want to see if they're trapped. The market breaks down. Then there's our retest level. That's what we want to see, that pullback into the high. That's what gives us our geometry now for the move back down. And we know there's volume getting caught back up high. 1 push, 2 pushes, 1, 2, 3 engulfment. It breaks down, pulls back. Anywhere where this starts to fall over, I'd be adding, and holding. At least back to where some sort of neckline is for the bodies that took that move up. Whenever you see rising volume like this, where the longs are chasing the move and it's running away, be aware that they can come back through that really fast. People who are entering in this trade are chasing this move higher. When it returns, it'll come back just as fast. So hopefully you got value from today's video, traders. Pump and dumps. Now, we didn't go into a lot of short examples in terms of the dump and pump, but you get the idea. Pin hammer, if you're on a shorter time frame, 45 minutes. If it's on the 15-minute charts, wait for them to lock in the high or the low. Consolidate, break structure, and start to reverse. That's when you'll see markets move quickly back in the other direction. Keep it simple. Stay disciplined, traders. Keep getting better, and may the markets go with you.
Hi, traders. It's Stacey Burke from Stacey Burke Trading. If you haven't done so, please head over to my website at staceyburketrading.com. I create updates on almost a daily basis, and I would love for you to receive them. Just click on the blog. If you want to enter your name and your email address, I'll send you my free audio program, the 7-Step Daily Routine for High-Performance Traders. This is essential knowledge for all traders in all markets. And this is for helping traders to master the market with discipline, confidence, and a winning mindset. I appreciate all your feedback and comments. As always, traders, stay disciplined, and may the markets go with you.